Switzerland, a country that's known for its picturesque landscapes, delicious chocolate, and most importantly, its banking secrecy. In fact, banking is seen as emblematic of Switzerland, and it has been portrayed with varying degrees of accuracy in overall popular culture, books, movies, and television shows. For instance, American historical black comedy crime film The Wolf of Wall Street 2013 shows how Belfort and his accomplices used Swiss bank accounts to hide their unlawful activities and launder their illicit earnings.
I'm curious about your bank secrecy laws here.
Similarly, the final season of Breaking Bad shows the characters using a Swiss bank account to launder their illegal earnings. But have you ever wondered how a small country like Switzerland became one of the world's leading financial hubs? Or why is it so infamous for its banking secrecy? And is this secrecy truly as solid as it appears to be? So let's delve into the history of Swiss banking system, exploring the important events that have helped shape the present system, and most importantly, about Swiss banking laws and how the region's banking secrecy has enabled an unequal global financial system. The Swiss banking system has a long history dating back to the Middle Ages, when wealthy merchants and traders used banks in Geneva, Zurich, and other cities to store their money and conduct financial transactions. While the modern Swiss banking system began to take shape in the late 19th and early 20th centuries as the country's neutrality during World War I and II helped to attract foreign capital and establish Switzerland as a safe haven for deposits. In fact, the history actually goes back to approximately 300 years ago. So let's start from the beginning. From its origins as a safe haven for wealthy individuals to its modern role as a global financial hub, Swiss bank accounts started to insure deposits in the 1780s, which helped them earn a reputation for being financially secure. And Switzerland's international neutrality was legally established in 1815 by the Congress of Vienna, which brought in a lot of money. At that time, the wealthy, landlocked Switzerland saw banking secrecy as a way to build an empire similar to that of France, Spain, and the United Kingdom. The Swiss Federation was established in 1848, following a little civil war between the Swiss cantons in the 1840s. The direct democracy used to create the state helped to create the political stability required for banking secrecy. One important development was the creation of the Swiss National Bank in 1907, which helped to stabilize the country's currency and establish a reputation for financial stability. The Swiss Bank Corporation and Credit Suisse, two of Switzerland's largest banks, were also founded during this period. And in the 1910s, during World War I, Swiss bankers traveled to France to advertise the country's banking secrecy. And a rapid financial inflow into Switzerland was triggered by the war's role in causing political and economic unrest. Rich clients shifted their valuables into Swiss accounts to escape taxation as European governments started to impose taxes to support the war. Swiss Bank Corporation and Credit Suisse, two of Switzerland's largest banks, were also founded during the early 20th century and became major players in the banking industry. However, one of the key developments in the evolution of the Swiss banking system was the introduction of strict bank secrecy laws in 1934, which made it difficult for foreign governments to access information about the accounts of their citizens. Surprisingly, the law made Switzerland a sanctuary for Nazi officials, along with the nation's political neutrality. Adolf Hitler and his government benefited greatly from the close cooperation of Swiss financiers who provided financial credit and assisted fleeing Nazis in concealing their wealth after the Second World War. Moreover, this helped to attract a large number of foreign depositors as Swiss banks began aggressively selling their services to wealthy individuals as well as businesses who wished to avoid their country's tax authorities in the early 2000s. They were able to conceal their assets from their home countries and avoid paying taxes, while the bulk of people were governed by their respective nations' tax rules. As a matter of fact, foreign clients own over half of the 7.9 trillion Swiss francs, 6.3 trillion pounds, in assets that are being managed in the nation. It has aided in the development of an industry that contributes 10% to the Swiss GDP and provides a similar number of jobs. Secrecy is now the foundation of modern Swiss banking. Tax fraud is a crime in Switzerland, while tax evasion is not. And the disclosure of client information by banks, including the disclosure of the information to foreign authorities, is prohibited by criminal law. In addition to secrecy, they also have a comparatively high capital adequacy ratio, which indicates that the banks retain a higher amount of capital guaranteeing the protection of their customers' money even during a financial crisis. These elements have aided Swiss banks in building trust amongst their clients on a global scale. However, the Swiss banking sector encountered a variety of difficulties, including escalating rivalry from other financial hubs and demand to ease bank secrecy restrictions from foreign governments. In response, the Swiss government and banking industry took steps to modernize the system, including implementing stricter regulations and improving transparency. Even more recently, it appears that Switzerland has stuck to its commitment to banking secrecy despite the Russia-Ukraine war. Due to the severe sanctions imposed by the EU, Swiss banks stopped managing the investment portfolios of their Russian clients as of April 2022 and prohibited substantial deposits. The sanctions Switzerland has imposed are significant since it owned more than $11 billion in assets from Russian companies and people as of 2020. And although if these measures historically belong to the neutral Switzerland, they do not go against the financial secrecy heritage. Therefore, even in the face of international pressure, Switzerland was able to impose sanctions against individuals accountable for the war in Ukraine without even slightly compromising its heritage of banking secrecy. Now, the thing that I want to highlight here is that this Swiss banking system and the secrecy laws might be beneficial for the region, well, they actually are, but they're having a negative effect on the overall global financial system. For instance, due to the Swiss secrecy laws, the global financial system is now severely biased in favor of the wealthy, with a significant amount of the world's wealth being held by a relatively small number of people and corporations. Tax evasion affects people's lives directly and is not merely a matter of fairness or corruption in the tax system, that's a human rights issue. Like when wealthy citizens of a nation are hiding millions of dollars in Swiss bank accounts, making it impossible for them to appropriately support their children's education, or when wealthy people fail to pay taxes on both their ill-gotten and legal money, a country is unable to adequately feed or care for its most vulnerable residents. This is a violation of their human rights. Not only that, these secrecy laws also enable illegal activities such as money laundering, corruption, and other financial crimes to go unnoticed. It is estimated that a significant amount of global black money is held in offshore accounts, with Switzerland being one of the most popular destinations. The Swiss banking secrecy has also been criticized for allowing corrupt politicians and dictators to hide their wealth and evade accountability for their actions. In recent years, there have been efforts to crack down on black money, with various countries and organizations pushing for greater transparency and cooperation in the fight against illegal financial activities. However, the Swiss banking system's historical use of bank secrecy has enabled the wealthy to evade taxes and conceal their illegal wealth, and it cleverly manages to avoid repercussions every time. Let's take an example of one MDB case. It was discovered in 2015 that Malaysia's state investment fund, 1MDB, had been utilized to launder billions of dollars and support a Malaysian official's opulent lifestyle, and Swiss banks were found to have played a key role in the scandal. However, Switzerland was able to escape serious consequences by concentrating on a small number of found guilty clients rather than bringing any legal action against the relevant banks. So, Switzerland is fairly consistent in not breaking banking secrecy regulations, even though they are ready to make amends for previous wrongs by agreeing to pay hefty fines and, in rare instances, share a tiny bit of their client information. But it doesn't seem like the Swiss practice of banking in secret will end anytime soon, or does it? What are your views on this? Leave a comment and let us know. And if you found this video informative and enjoyed the content, make sure to subscribe to our channel and hit the like button as well. Thank you for watching.